All right, welcome to the daily market recap for Tuesday, August 19th. Pretty brutal day out there. And if you lost money today, chances are you've been making money the last couple of weeks because today the leaders, they really got whacked. In today's video, we'll be going over the action of the indexes, the liquid leaders, industry ETFs, then end the video with long and short setups like we do with every daily recap. If you guys enjoyed the video, please leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with a live stream at the market open, you can sign up for the Discord using the link below. All right, jumping into the Nasdaq, finishing the day down 1.36%, 1.4%. Have our second slight gap down off the chart, and we now close right on the 20-day moving average and decrease the support gap to just a sliver at this point. And zooming out, we've been running for many months now, starting to see volatility pick up. And then we saw an acceleration move. So the rate of change, basically from June 23rd, it's been nice and steady. Then we got those two distribution days on the 31st and August 1st, followed it up with a real acceleration into highs. And now we're starting to see that volatility play out on the downside as well. So closing on the 20-day moving average, uptick in volume down 1.4%. The S&P 500, not nearly as crowded of a trade as the Nasdaq, which we'll cover the COT data in a little bit here. But S&P 500 down 0.55%, just to the 10-day moving average. Uptick in volume, but overall not doing anything wrong, just pulling back to the breakout retest at this point. Even pulling back into the 20-day moving average and gap zone around 636 would still be healthy in my mind. IWO, this is the growth stocks of the Russell 2000. Gap down today, open on the high, close right near the low, losing the 5 and the 10-day moving average on more volume than yesterday, but still not an incredible amount of volume, which makes sense because positioning on IWM on the Russell is so short at this point. So it's a little shocking to see there's still sellers in that group, but here we are back under the 10-day moving average. Another kind of just breakout retest at this point. Then ARKK, some pretty brutal action today. Slight gap down, open on the high, close on the low of the day, losing the 5, the 10, and the 20-day moving average all in one go on an uptick in volume, ending the day down just around 4%. And then finally, taking a look at IBIT as a way to track Bitcoin. Very quickly, we went from new highs to the 50-day moving average, and this is looking more and more like a failed breakout to me. And we're really starting to see Bitcoin kind of unwind and MSTR especially unwind to the downside. So earlier I mentioned positioning was very long for Nasdaq, very short for IWM. I've been looking at these COT datas, commitment of traders reports, a little bit more and trying to familiarize myself with that. Jason Shapiro is, in my mind, the expert on this. This is what he uses to trade contrarian trends. And just looking at this from bar charts, the NASDAQ minis right here, we can see commercials are very short, kind of offsetting the large speculators and small speculators. Both long or large and small speculators were extremely long the NASDAQ. And we got that as we were already extended after we already made an accelerated move. So once we start seeing breaks in the structure for some of these stocks, you just have a lot of people that have already bought. Who else is left to support price? Probably not many people. And you get a pretty swift move to the downside. Now, taking a look at the Russell 2000, opposite story. We see large and small speculators basically flat. Large speculators extremely short the IWM. So IWM, IWO, right in there. Basically small and mid cap stocks. Extremely short that, and the fact that even that sold off just shows the weakness in the market at this point because you wouldn't think there's more people to sell at this point, but the chart can go lower for sure. Um, Jumping to the leaders next, we'll sort this by price percent change, try to highlight the good stocks, but not many out there today. Meta, slight gap down. Yesterday we lost the 5 and the 10-day moving average with a gap down. Today, similar action. Open on the high, close on the low, losing the 20-day moving average. Now we're below the closing price from earnings, and Still not doing like anything horrible. This is just kind of like a breakout retest, but it is telling that we made new highs and then immediately had two gap downs and lost the 20-day moving average in 2 days, while positioning in the Nasdaq is very crowded. FUTU pulling back to the 10-day moving average. This reports tomorrow before the market opens, which makes sense why it didn't have like a very large price move. Very interested to see how this responds. There's a couple of Chinese stocks, if I go to the earnings whisper page, that report tomorrow before the market opens. Baidu, DY, I believe DY is Chinese. Let me check that. But FUTU, GDS, BZ, also interesting. Target and Zim before the market opens. After the market closes, none of these names I'm really interested in. And then Thursday, before the market opens, we have Walmart, we have a solar stock and CSIQ, and then a bunch of other Chinese companies. So that'll be really important to see because like I've said in many of these videos, the KWEB Chinese Internet ETF has been basing for 3.5 years. It looks ready to get going now, but if the general market is weak, do we see rotation from US stocks into China potentially, or do we just see money leave the market altogether? So FUTU, pretty important earnings tomorrow. NVIDIA, ugly action today. We had just been trading sideways without any price appreciation for a while now, with a couple of these pickup in volumes to the downside. Today, we finally cracked lower, opened on the high, closed on the low of the day, back through the 5, the 10, the 20-day moving average. This has earnings in a couple weeks on the 27th. MP holding up relatively well, pulling back into the 20-day moving average and bouncing at that support gap zone and that key moving average. Ideally, we can come back in and test that tomorrow, and that would be a pretty tight risk reward spot for anyone trying to trade the bounce there. But this does have two gap downs in a row, which shows some weakness in the market. And even Reddit was down today. Reddit hasn't been down. It feels like in forever. I guess yesterday technically it was down what 2%. But we do finally snap that 5-day moving average. Really strong accumulation since earnings, but now back under the 5-day, a little pickup in volume and a gap down. So 10-day moving average and gap right at 223.70 area is spot to watch to see if we get supported there or if we're seeing follow through to the downside. We've seen a lot of 1-day pullbacks in the market. We haven't seen many 2-day or actual follow through to the downside. So a lot of these stocks, I'll set alerts at a gap zone at a key moving average for like all the leading stocks and some key stocks that I'm trying to watch, and just use that as market feedback throughout the trading day. SoFi, bearish engulfing candle. We got a gap up to start the day, and it was just selling throughout the rest of the day. Loss of the 5 and the 10-day moving average, ending down 6.2%. Robinhood, I got stopped out of this today. Just two distribution bars back to back right at highs. This also gapped up today. I think there was some news about like a sports betting, like with college football going on. I was happy that it gapped up. I was like, all right, here we go. We should press into new highs now. And unfortunately, it just reversed, lost the 5, the 10, and then yesterday's low. And that was my stop. Got stopped out there. Hopefully, we can hold this support gap and kind of just build out a base up here. We'll see. That'll be a good test for the market. ALAB, a third gap down off the highs. This also stopped me out today. Lost the 5-day moving average, lost the 10-day, and the high volume close. That was my stop. So just booked that trade for a couple percent gain. And then Palantir, this was the big weakness today, down 9.4%. Another gap down. Rally just like very shortly in the morning, just like a couple minutes, and then really brutal sell off through the 20-day moving average and the entire gap up from earnings. Thankfully, I was short this name, so it really offset a bunch of my losses. But when you get a move like this that just splits a key moving average and a massive gap zone, I saw a lot of people on Twitter or X, whatever, saying, okay, the gap is filled on Palantir. Now it can go up. Filling a gap on a closing basis is not a bullish price action. If you undercut a gap zone on an intraday basis and rally from that point, that is bullish. But closing below the entire gap zone is not a bullish thing. Don't let people trick you on that. Yes, we can see a rally into the declining 20-day EMA here, but this looks really bad. In my mind, the three kind of kings of the market were Robinhood, NVIDIA, and Palantir, and they all lost their 20-day moving average. I guess Robinhood's right on it right now, but some pretty ugly action from the leaders today. Jumping into the industry ETFs, we did have some strength out of home builders again. So thinking about positioning, IWM is very heavy with rate sensitive stocks like home builders, and that actually saw good money flow today. We gapped up, opened right near the low of the day. We did try to rally through into highs, closed slightly below this resistance gap, but this is consolidating above the 5-day moving average on another uptick in volume, while the rest of the market just rolled over. So great relative strength out of home builders, and definitely a theme to focus on. If this can pull into the 5-day moving average and gap zone, that would be a spot that I would look to put on some exposure there. IYT, this was up a little bit, 1.2% because of the strength in Uber. That is going to, so sorry, I should have said this. Palantir, I'll be replacing a couple of these other stocks. I might be replacing as well. Definitely Uber is top of mind. TME is top of mind, and then BE as well as potential replacements. But I didn't want to like replace the stocks and not show how brutal the action was from the existing leaders list before I made that replacement. All right, a couple other industry ETFs. Cyber, we opened at the high, right at the support or resistance gap and the 20-day EMA, sold off through there. This still looks like it could potentially be building the left side of the base here. Maybe we can flatten out here and eventually put in the right side, but still needs a lot of work. KWeb, holding the 5-day moving average, which is great price action given the market today. I am still long this or long CWeb, which is a leveraged version of this. So hopefully FUTU's earnings come in well tomorrow, and if we go to a weekly chart, you can see that 3.5 year base that we've just been building, building, building. When this does break out, it'll have some nice legs to it. So I want to be positioned for that. ITA is the defense and aerospace ETF. This was the leading group off the lows of the market back in April. And now we've traded sideways for a couple weeks, and it seems like we're starting to roll over. Likely we'll test the 50-day moving average and support gap down at 190, and we'll see where we go from there. But this doesn't look great to me. XBI, I do have a position in LABU. This gap down today, lost the 5-day moving average on an uptick in volume, but still lighter volume than the accumulation days. So for me, I got in on the wedge pop through the 20-day down here. I have some space to let it work, try to put in a higher low. I'm not in a rush to take profits on this. I'm actually looking to add to this if it can find support, just because of that, again, that exposure levels to IWM being so short. If it works, it can have some nice legs. TAN, the solar ETF, stopped sideways today, down 1.7%, still above the 5-day and the large gap from yesterday. Still not doing anything wrong. Semiconductors lost the 5, the 10, the 20-day EMA today, closing at the low of the day, very similar to NVIDIA, sorry. And then IGV software ETF, we gapped up, or sorry, didn't gap up. We rallied up to the 20-day moving average and resistance gap, immediately sold at that level, and then flushed lower into a lower support gap on a big uptick in volume. Now this just looks like the left side of a base that we're going to be needing some time to build. I was hopeful that we would kind of push here, and then this would just be a little wedge. But today's action really tells me that we're going to need some time to build. Um, NLR, kind of the AI energy theme with nuclear and uranium. That gap down, lost the 50-day moving average, not good action. And then one change I did make, I switched out XOP because I already have XLE and they're kind of overlaying the same thing. And then I added MSOS, which is the cannabis ETF, which has been acting extremely well off the lows from $2 up to $5, now consolidating at the 10-day. Because it's a new ETF, I'm not really like, I won't trade this until I spend some time understanding how the price action works. But I'm sure this is very regulatory news driven. All right, jumping into the long setups. Just like I covered short setups while the market was in an uptrend, I'm going to be covering long setups when the market's in a downtrend. You can use these as just market feedback. So if the setup works and we break to the upside, then you start to have some evidence that the upside is working. And if you don't want to trade longs when the market's right at the 20-day moving average and leaders are breaking down, that's probably a good idea. I don't think there's a ton of quality setups on the long side right here. Now it's probably time to focus on the short side. But I'll always do the long and the short setups in these videos just to get market feedback from both ways. So first we have Rocket Mortgages. We talked about the home builder's strength. This good action today, finishing up 3.4%. I'm still waiting for a pullback on this because we do have the gap down from the highs. The general market is weak. So instead of trying to buy like a 2-day pivot through 1850, I'll be watching for a further pullback into 1714. That would align with that the low of the gap zone and the 20-day EMA. So if we see more distribution there, a quick undercut and reclaim of that area would be the buy point. SE, we've talked about foreign stocks acting well. This is I think Singapore, right? Yeah, Singapore stock still holding over the high volume close from earnings, still over the 5-day moving average. Just looking for a pullback into that area to manage risk against the low of the pullback and the 10-day moving average. RUN, I want to get some solar exposure. I didn't get the breakout last Thursday, or what was that? Friday, last Friday. So staying patient, waiting for a pullback, waiting for our spot. Taking a look at RUN to just pull back into the HVC, into the 5-day moving average here, right around $14 as a potential entry. AFRM, this was on the watch list yesterday for kind of like a squat retest of that pivot at $79. Today we had a gap down, so that never triggered. Gap down, lost the 5 and the 10-day moving average. Now we're back into the 20-day and support gap. This could be like if this was just a 1-day shakeout in the market, like we've seen many times. We've never seen the leaders act this bad, but maybe this is just a 1-day shakeout. You do have the support gap. You do have the 20-day moving average, which would be a higher low in the overall structure and kind of building some like tightness in this flag before earnings on the 28th. So undercut and reclaim would be the trade. Again, I'm going to have alerts on this. Whether I actually trade this is not as likely. LIT acting well, pulling back from the new highs, kind of in no man's land between the 10 and the 20-day moving average, rallied up an inside day today. Again, in this market, I'm not trying to buy strength in there's only a couple setups that I would buy strength on, which we'll cover in a second. Looking for a pullback into that 20-day moving average and support gap at a 111, like 65 area. Lemonade Insurance, another one that's consolidating well over the 5-day moving average, has had pretty explosive moves recently. Now we're just waiting for a 10-day EMA test and gap zone low, right at 54-55 area, to see if we can undercut that, kind of shake people out, and then reclaim that zone. Stop would be the low of the shakeout. MP kind of covered this on the leaders list. I don't love the 2 gap downs. Today we did bounce at the 20-day EMA. I would be really looking for a quick shakeout to the gap zone below the 20-day. So it looks like this is failing overall as a stock. And then we undercut and reclaim that right at 65.50. More so, I'll just be using this as a measure for the market. NBIS pulling back into the 10-day moving average today. What was this down? 7.4%. So very volatile stock. We do have a gap down on this. Just pulling into the HVC and undercutting the support gap low. That would be the buy point. Stop would be the 20-day moving average and the low of the gap up here. Pony is about the only setup that I would take on the long side because it's a Chinese name. Because we have FUTU and a couple others reporting in the morning tomorrow, and because we have that massive base on KWeb, this really didn't do anything wrong today. Down 2.6%, didn't even get to the 10-day moving average, and then closed at the 5-day on lower volume than yesterday. Overall, great action on this. I would just be looking for a gap up, opening range break through 16 as the buy point. Stop would be the 10-day moving average on this. And then Tesla, I did get stopped out of my position today through yesterday's low. I'll look to get back in if we can undercut the 20-day EMA, the 200-day moving average, simple moving average, and the pullback low, then reclaim those areas. That would be the entry, and then the stop would be whatever the low of the day is. I wouldn't want to give it to the 50-day just because the market, the action of the leaders today is not something to ignore, in my opinion, especially when positioning is still so long, the Nasdaq. So still kind of a pullback setup. Look for a quick shakeout and then reclaim as a potential entry there. The short side is what I'm much more excited about. Some of these are weak stocks that are rolling over. Some of these are stocks that are trading very, very tight above the 5-day moving average, which if you go back through previous like market corrections, after your first day, a lot of stocks that show relative strength on day one are actually just the next group of stocks that sell off. So, with that in mind, if today was just day one of a potential correction in the market, these are some names that have really tight price action that we can manage risk against. The first is Wayfair. This stock has run from $20 up to $80, so about a 4x off the lows. Trading tight above the 5-day moving average. You would probably say that's relative strength. You would be correct. Relative strength for one day. But we did try to get going. We made new highs, then closed on the low of the day. Just looking for a short through the 5-day moving average. The stop would be the high of the day from today. Root is the opposite side of that. This is a name that's already broke through the 200-day moving average. Now we have this mini rally and we're back to kind of the lows of the sell-off. This we're looking for an accelerated move lower through today's low. Stop would be the 5-day moving average on this name. Roblox, we had the gap down on Friday, was that? Yeah. Rallied a little bit today and then actually like good relative strength, only down 1.4%. Looking for an uppercut and fail of the 20-day EMA as a potential short spot here at 123. And then the stop would be above the resistance gap high. SERV today was the perfect entry on the short side. I did not get it, unfortunately. We gapped up an uppercut right at that resistance gap high in 20-day EMA, and then just sold off the rest of the day. Finished down 6.1%. Now you're like sitting on a support level. So just like there's breakout traders to the upside, you could be a breakdown trader instead of trying to trade an uppercut and failure. And just through today's low would be a short. I would rather like a morning rally and then you lose the VWAP short there versus the high of the day, just so you have a little bit of space before this area that we've seen buying support come in, just to keep your like risk reward better. But just through today's low is also a short entry. LAES, this is one of those speculative names that went nuts in December from 38 cents up to $10. Never quite got back to highs, only rallying to 466. Then we lost the 200-day moving average. We rallied back up and we started to accelerate the move down today. This is one because we got a pretty big bar today. I'll be looking for a rally up to like the 265 area. And this is a thinner name, so not going to be taking this with larger position size. If you have a smaller account, you don't have to worry as much about that, but still probably wouldn't take this with like an overwhelming position size. QUBT, we finally saw the quantum names start to crack lower. RGTI, here we can go through it. RGTI today lost the 20-day EMA, well, the 5, the 10, the 20 on volume. QUBT is one that we're covering in the short here. We uppercut and failed at the resistance gap, lost the 5 and the 10-day moving average, closed on the low. This is one where I think just through today's low, you can add to your short if you got it up here or if you're starting a new position. And then the other names, IONQ, big sell off after some tight action under the key moving averages with the 50-day rolling over. Not good. And then even QBTS, which had actually made a new high where like a lot of quantum names didn't. We've now lost that HVC. We've lost the 50-day moving average. That's flattening. So it feels like the entire group is kind of falling apart here. So QUBT just through today's low. IONQ, because it's already extended down and we're at a support gap here, I'd be waiting for like a little rally up to like a morning rally, then a loss of VWAP as a potential short versus the high that day or the 5-day moving average. But overall, I think the theme is kind of cooked here. CEP, this was on the short watch list coming into the day. We got that gap down. We got that acceleration lower. We actually closed under this support gap, and I wanted to wait to draw or to remove that drawing just for dramatic effect. Now there's really not much to support the stock, and we could really start to see acceleration lower. A little morning rally, loss of VWAP, that would be the short. Or if we can get like a 2 or 3 day rally up into the 5-day moving average in today's gap, that would be even better on this name. And then two names that have had just pure momentum to the upside that now that the market is acting weak, we can profit from that momentum dry up. First is ZEPP. Uh, I don't think this chart is broken just yet. I said I would only short it on a gap down. I didn't actually take this short today. I was working on some other things, but ended the day down 9.9%. Now, if we see like similar action with NEGG, where a lot of the times like this had gap down and then consolidated on the 5-day moving average. So this I want to take on weakness. I want to see momentum being completely sucked out of the market because this is a name that if there's just an ounce of momentum, it can explode higher. This is run from $2 up to $43. So don't discount that momentum just yet because this hasn't closed out under the 5-day moving average. Like this is still in an uptrend. We have one gap down, but we still had we closed higher than the opening price. I I wouldn't be surprised if this still made new highs, but what I would be watching for is a gap down and then a loss of the 5-day moving average. You could start your short there, add to it through a loss of today's low, and then that 10-day moving average. But I think with momentum leaving the market, this is going to have a quick trip to the downside. And then same with NEGG. I was getting a little worried in my short here because we were consolidating above the 5-day moving average, just like we did here, just like we did here. So I was talking to Ariel and I was like, the only way I stay in this short is if we gap down today. Thankfully, we did gap down. We lost another 15%. And that's like, we're down 15% and we're just to the 10-day moving average. That shows you how insane this move was from $3 up to 136, no, 100, $133, excuse me. Now we've got two gap downs. Momentum's leaving the market. It's not going to stay up forever. I will be adding to my short through the 10-day moving average on this and just trying to play for a move that completely unwinds because studying some of the quantum names back in December, like QMCO, which is like a fake quantum name, but had a similar run from $2 up to $93. The stock's now trading at $6 in a year, basically. So these stocks that have made insane moves, like just because they've made insane moves, doesn't mean they're going to get supported at key moving averages and keep going higher. A lot of these names are just going to go right back to where they came from, and I want to profit off that. All right, that is the unfortunate daily market recap for Tuesday, August 19th. Hopefully, everyone was safe out there. Again, like I said in at the beginning of this, if you lost money today, chances are you were in the leading stocks for multiple weeks. And this is just part of trading where the market's going to come in. And if you're trading momentum names and you're trading the market leaders, they're heavily correlated. So when we get a day like today, it hurts. But you probably made a bunch of money over the past couple months. And here was your first kind of crack on the leaders. Hope you guys have a great rest of your night. Please like and subscribe. And if you're interested in that Discord, there's the link in the comment section below to try it out. All right, take care.